Hi, everybody. I'm Katrina with K14's Cash Coaching. I run my own business helping people budget their money, pay off debt, and build their credit scores. So I'm here tonight to talk about different insurances that you need in your financial life. So before we get started, I just want to say this week has been awesome, helping a lot of new people reaching out saying, because of you, I am saving money. Because of you, my credit score went up. Things like that they've learned just by listening to me on Sunday nights or checking my Instagram and seeing my tips of the day or whatever. So a lot of people also are on a savings plan, which they haven't been in ever. So they have been purchasing my little coloring sheet that I made, super cute. But then you just color in depending on what your goal is. So super cute, but that's on my website. I also added a new inquiry letter to dispute inquiries. So a lot of people have ran their credit multiple times. They're like, what? Why did they run my credit so many times? And I'm like, they should only run it once, and the other ones can come off because that can impact you 2 to like 20 points really per inquiry. So tonight we'll be focusing just on insurance. So if you are following me on any of the social platforms, please type in how you're following me. So if you know me on IG, if you know me on YouTube, what are you following me on? Let me check and get a gauge of where my audience is. I also will be launching my online course teaching people how to get on a budget, pay off debt, and piggies, yes, and build their credit score. And everyone who enrolls will be eligible to win the Fire tablet with the cute case, which is green, even though my child says it's not, and then I'm colorblind, but whatever. So there's that. Let's see what everybody, all of the above, yes. And she's going to be putting one of my decals on her car, which is so exciting because I'm having a giveaway right now. If you can find me out in the wild, aka in Phoenix, Surprise area, Goodyear, I'm sometimes in Avondale also, you get $20 on the spot. So take a picture of yourself with my car, and it just says K14cashcoaching.com, has YouTube and my license plate and everything. Love the green clock. Yes, girl, I'm keeping true to my girl boss, keeping true to my brand, the color and everything. So first order of business is, if you own a vehicle and you were upside down on the last loan, or you weren't able to put down a lot of money on the loan and you drove it off the lot, then you probably are underwater. So by underwater, that means you owe more than what the car is worth. So if your car is worth $15,000 and you owe $20,000, if you crash and total that vehicle, the insurance company is only going to pay your $15,000. So that means you need to have $5,000 cash money to pay off that loan, or you're going to still owe that $5,000 and not be able to get another car because you already have a loan out for that car and things like that. So gap insurance is what will cover the difference. So if you own a vehicle and you have negative equity, there we go, couldn't think of the word, you have negative equity, then gap insurance is a great insurance to have in your financial life to cover you in the event that this happens, because it could be, I think I paid like $340 on my older vehicles, my other vehicles previously than this one, and it ended up, I never crashed a vehicle or totaled or anything, but it ended up costing like $340 or something. But that $340 is a good investment to not drop $5,000 out of your money to get rid of that car loan, because you can't drive the car anymore, it's gone. The insurance already totaled it out. You have to make up that difference. So gap insurance is what that's called, and you get that through, usually the dealer is the easiest way to go because you're already there, they're already making money off you, so you might as well just sign. I can tell a lot more people are rolling in because it was like 6 and now it's like 11. So I don't know what you guys can see because you're about 30 seconds to 2 minutes behind me. So as you're typing, I've already talked about it probably, so catch up. Okay, another one that's very important. This one is near and dear to my heart because I've seen lots of friends, family, people, hi Francine, lots of people that aren't prepared, I guess, for this situation. Obviously, I'm talking about life insurance. So life insurance is a tough one because people don't want to pay the money, but they also don't understand if they die, their family's responsible for that burial and all that. So that's why you see a lot of car washes and GoFundMe's and things like that, because these people that pass away aren't prepared for this inevitable thing. I mean, we're all going to die. Duh. At some point, it's inevitable. It could be tomorrow. It could be in 30 years. We don't know when we're going to die, obviously. So to be prepared and not put your family in that situation, especially if you're an income person, you're giving the income for your family, or if I were to pass away, then my husband would have to come up with daycare and things like that to make up for the loss of losing me. So the baby's at home with me. Now someone has taken their baby so he can go to work type deal. So I'm worth something too. And now I have a business, so I have to cover those expenses also, that I'm getting income and things like that. So Dave Ramsey wants you to have 10 times your income, which we went over this a couple weeks ago when I had Kathy Santiago on. She was talking about, doubling your income, things like that. Dave Ramsey says 10 times because if you have kids, if you have a mortgage, if you have debt, car payments, student loans, things like that, your spouse is still left with that debt because you're married. So 10 times your income, if you make 50 grand a year, you need to have $500,000 in an account. If you don't have kids, you're single, you still need to take care of your family and not put them with that burden of the $10,000 to bury you. If you just want to get cremated, it's still about $3,000. So just a small policy won't cost that much, a few dollars a month to take that risk to save all that stress. They're already going to deal with your loss. They're not going to want to deal with washing cars in 116-degree weather in Phoenix. It's ridiculous out here. Whole life insurance. That, oh goodness, whole life insurance. So my grandma opened up an account for me when I was, I believe, 3. Don't quote me on that because she might come up in here and comment. But I want to say I was like 3. And I closed that account 23 years later. Whole life insurance means it covers you for your whole life forever. But it's more expensive per month because they don't know when you're going to pass away, obviously. But if you have a term life insurance, like a 20-year, 30-year, 25-year, things like that, it only covers you until then. So that gives you all that time to save up money to pay for your burial, to pay off your debt. So that way when you do pass, your funeral is taken care of, but your family isn't really getting a big payout if you live past that term. So whole life insurance. Supposedly, the way they sell it to you is it's an investment. Insurance is not an investment. Insurance is moving the risk to somebody else. So if you can't put up $300,000 to fully redo your whole house, cash money, then you have homeowner's insurance. Same thing with your car. If you don't have 30 grand to buy a new car, then you have car insurance to cover that. And in an event you hurt somebody else in the accident, they're obviously going to sue you because we all know we're America and we're sue happy. So 10 times your income. So it's not an investment because after 23 years with this account, they told her it was going to be such and such money probably. They tried to sell it to her like that, and it ended up being, hi Mila, it ended up being $300 something to close that account. $300, and I promise you they quoted her way more than that. I could tell you because they tried to sell it to me and I was like, nope, honey, give me a 30-year, I'm good. So $300, it was like $322 after 23 years. That's a horrible rate of return. Horrible. So no, do not get whole life insurance, please. Next one. So we went over Gap, life insurance. I got 2 more. Make sure you follow me on all my social things. Send your friends to me, please. I got 5 new clients this week, and I'm taking all of them. Disability. Okay, so disability insurance. That's the next one. Has anybody dealt with disability insurance? Because I sure have. Yes. When I had Celine, she's 5 now. When I had Celine, I added, before I had her, before I got pregnant, I added disability insurance to my, they took it out of my paychecks. It was like $20 a check, so like $40 a month. But when I had her, I was out of work for 12 weeks, right? I still got paid. Let me tell you. So some companies, yes, will pay you. Teachers, no. So kindergarten teacher, you don't get paid. You take time off, you use your time off, your days off. They'll hold your job for you, but they're not going to pay you your full check. So I got disability insurance, and it covered me 66.7% of my checks. I wasn't mad because I wasn't making any money. I wasn't planning on going back to work, so I don't even care. I also got a hospital indemnity, which I might not have, shouldn't have done, but they paid me if I broke my elbow, if I had, I don't know, something weird going on, and I went to the ER and I got admitted. They paid me $500 for 1 day. So when I had her, I got the disability and that $500, but I'm not saying get one of those, but that's what I got. My husband, he is in a not safe job, so he needs to have this just in case something happens, because he is the breadwinner. So for now, because he, if something happens to him, obviously we still got to pay bills and things like that. And if he gets hurt on the job, then it's workman's comp, which is what happened last year. Thank goodness, no offense that he got hurt, but thank God it happened on the job and he wasn't playing football with the boys or something and threw out his knee, because then it wouldn't have been covered. It would have ate up, what is it called? He could have ate up his sick pay, holiday pay, and there's another one that he gets, sick, holiday. What else do people get? Something else. Yes, I had Aflac. That's what it was. I added Aflac, which was through, came from my checks, but it went to Aflac separately. My short-term disability only pays for 5 weeks. Hey, wow, that's probably not the best choice then, I guess. I'd be really mad if I had that. Hello, Kaleo, all the way from Maryland. I know you're sleepy, boo. Okay, next one. Okay, this one is this one's hurts. Comp. Thank you, comp. And she knows, because she knows. So comp time he could take out. But then he's eating up my comp time, my holiday pay. We can't go on vacations now because he's taking his vacation pay. I'm not, no, we need to have our own coverage of this. And personal days would be, yeah, he does have personal days too. Listen, they give away free days like nothing in his job. But, okay. If you have an older person, i.e. your mother, in my generation, it would be grandparents or great-grandparents, but long-term care. Long-term care is obviously for older generations than I am. But let's be real. Something could happen to me, like, knock on wood, I can get in a car accident and be in a wheelchair, and I might need long-term care, and I'm only 33. So, her employer offers it free for her disability. That's awesome. But what you need to think about is not yourself right now, but for, like I said, your grandparents and your great-grandparents and things like that. Because if we're working, we can't take care of our older generations. Do you know what I mean? This is sad to think about. But we can't take time off to be a full-time caregiver to our family, some of us. So we don't have the luxury of staying at home and just taking care of elderly people and things like that. And my great-grandma got it at 50 years old. Ooh, that's scary. Well, she had a lot of ducks in rows, if you know what I'm saying. My great-grandma took care of things. So, but something you need to think about for your grandparents and possibly parents, depending on your age, and great-grandparents, because we had 5 generations. I had my great-grandma, my grandma, my mom, me, and my kids. So, and when I was born, it was the same. So we had 5 generations then too. But you need to know the maximum payout for the policy. That's one question to look up. You also need to see if it expires at a certain age, because some of these policies, the people think they're covered until they die, and it could cut off at a certain age because they anticipate you dying. That makes sense. My grandma got it at 66 and she pays under $100 a month. But think about a care facility, right? I mean, people are having strokes all the time, and then they can't walk, they can't feed themselves. It's crazy out here. But, which again could happen to anyone at any age. But for $100 a month, that is nothing compared to what they are charging in these facilities. I mean, I'm talking like $5,000 a month. A month. You can get a mansion with like $3 million and pay that, or $2 million, whatever. So yeah, it's crazy. How much? Okay, I'm sorry. I'm reading my notes. Okay, and how much payout per day? Because that's another question to look at when you're looking at different policies and different things, different businesses to go through. Obviously, there's going to be many companies with many options. And then, like I said, some are expensive. So if she's paying $100 a month, that's a lot cheaper than $5,000 a month that she would have paid, or we would have had to pay and come up with and figured out, get her state support, and then she's in a not as good facility, things like that. So those are some questions that you need to check on your grandparents, your parents, heck, your aunt, your aunties, your uncles, everybody, because I would want that in place so my kids wouldn't, $6,000 a month, wow. So I wouldn't have to have them worry that they would have to take care of me. Obviously, I would prefer that. So I'm going to be training them like, yo, if something happens to me, you guys all have to take care of me. All 3 of you. You can rotate. We can do joint custody and rotate me. I don't care. But let's be real. I don't know what it's going to be like. I mean, especially in the year 2050 something, in 30 more years, who knows? There's going to be robots taking care of people. I don't know. So that's my gist for the day. I thank you guys. Please share my videos. Let your friends know about my page and all about me. And I am taking clients right now, about 2 weeks, 3 weeks wait list right now. But the sooner you get in, the sooner you get on the list. So I appreciate everybody, and I hope you guys have a great week. And I will be back next week for some kind of training. Stay posted, and you will find out what I'm getting into this week. Thank you.